thanks to both of you for being with us on the show. Hope you're safe and healthy. Mr. Pankaj, I want to start with you. You supply packaging to a whole host of industries, and especially now with rising coronavirus cases, the demand for packaging has gone up, I'm sure. But you tell us, what is the situation on the ground, and what is the incremental opportunity that you see?
Yes, so the demand has gone up, as we saw last time also, that when people are at home, they are consuming more packaged food. So what we see is that flexible packaging demand has gone up. Labeling demand because of sanitizers and drinks has gone up. Tape demand has gone up because there is more online ordering that consumers are doing. Only one segment which has been impacted is the textile, because retail is not open in many cities, and therefore textile bag demand is down. But on an overall, I would say that the demand is higher than the normal demand.
Okay. Thanks, Pankaj, for that. Rajesh Bhatia has also joined into the conversation. Mr. Bhatia, what's the experience at your end, and any sectoral color you can give?
As Pankaj said, that the demand in FY21 has been very, very robust for the packaging. For us, if we see overall, the packaging films business grew by about 23% in FY21, and packaging per se grew by about 17% in FY21, and that's a substantial number. Because we are talking about almost 1/4 increase in our volumes. The Q4 is also seemingly much better than Q3, and I think we'll have a double-digit growth in both the segments. So the packaging has been a great year for us for FY21, both on the packaging film side, aseptic packaging, as well as the normal flexible packaging. So I think the packaging business, as everybody is witnessing, is doing great. It was already on a steep uprise curve, given that the capacity utilization across the industry was, touching almost 80% and above. And, we had a huge correction in the raw material in the Q1. They have come back with a vengeance, and but still, I think the margins continue to be good, at least on the packaging side as well as on the BOPP films. The BOPET films have corrected a bit, and that's where the margins are a bit subdued.
Mr. Bhatia, yeah, that is exactly what was going to be my next question on this surge in raw material prices. Can you put some numbers to what you just said? How much did the raw material prices rise? What was the impact, or what is likely to be the impact on margins?
So I think we have to divide it in the various segments. If we take BOPP, yes, the increase in the raw material prices, if we take from the lows of Q1, has been to the tune of about 45 to 50%. But this segment has been able to pass on all the costs, and but still there is a slight improvement in the margins in this segment. The BOPP segment, which saw today about a 60% increase in the raw material prices, is languishing a bit and is finding it difficult to pass on the increased cost of the raw material prices. So that there the margins are a bit affected, but BOPP side the margins are much better as compared to the BOPET. The packaging is consistent, normal, and as I said that in this wave there is no panic buying, because the government has made it clear that there's not going to be any lockdown, so people are just not going to hoard up. Yes, there'll be some pent-up demand coming in certain segments like sanitizers and the wash stuff, but that's going to be very, very, very normal. So we don't expect anything which will have a pent-up demand kind of situation in the wave 2.
Okay, Mr. Pankaj, across many segments that you operate in, whether it's packaging films, lamination films, label films, or even industrial films, where are you seeing the maximum potential now? And if you can just help us with what the growth rates could look like in FY22 for these various segments?
Yeah, so the growth is highest in the packaging and labeling segments. And as Rajesh already said, that it's varying between 15 to 20% across the board. However, for Cosmo, even the synthetic paper and industrial films are growing very nicely because there's a lot of technology behind it. And there are a lot of technical applications that we are able to build on these films. So that segment is again going quite well for us. But overall, I would say that packaging and labeling are the hot picks right now.
Okay. And in terms of FY22 growth, I was looking at your numbers. 9 months FY21, your revenue is still down about 4%. So you were facing a bit of pressure. What kind of overall revenue growth can you assume for FY22?
Yes, so actually this degrowth happened because we did not add any capacity last year. And in the month of April, we had some shutdowns, and therefore in let's say in the 9-month period, we are seeing a decline. Even in the current year period in the film, the year just started in April, we do not expect any significant growth because there is no new capacity addition and we are fully booked up. Month over month, we are seeing that we have 1 month of order in advance all the time. However, the growth will actually come from our chemical business, which has started nicely, and even the pet care business, which is going to start from Q2. So on an overall basis, we expect that we will have around 8 to 10% growth in the full year, but most of this growth will come from chemical business as well as from pet care business.
Okay, then just one final question. You're sitting on debt of almost 450 crores. I was going through your previous quarter's presentation, which is about 1.2 times debt to EBITDA. Any plans to bring it down in this calendar year? And if yes, by how much?
Yes, so we are already at 1.2 times, which is quite low number. Ideally, we would like to keep it around 2. This year again, because we expect to be a very good year for Cosmo Films. Therefore, we expect that debt should come down further. Having said that, we also have a major expansion going on, which will commercialize in Q1 of next financial year. So most of the capex for that new line, which is close to 350 crores, would actually happen this year. And we also have some capex in the Cosmo Specialty Chemical. So this year we'll have a lot of capex as well. And therefore, there'll be a small reduction during the year, but we will be maintaining close to 1 number of debt-EBITDA ratio.
All right, all the best to both of you for the year to come. It has been a very challenging year, but you are in a business where demand has picked up. So kudos to that. Well, so is the market, by the way. Look at the big bump up. We're getting better by the minute. 206 points higher now on the Nifty. Back